Hello, everybody. Welcome to Street Smart Investing. I'm Albert, and now I'm gonna do the banking sector like I promised. So, as we have here, I'm gonna click on the banking sector. Um, I keep saying banking sector, but what I mean is the banking services. It's because they're sort of alike, but again, banking services. I think they only specialize in one thing, which would be consumer lending, and then maybe a few other banking services. But that's what they're known as. So this sector is not banks, banking services, but I'm sure there are a few banks in this list that I might go over when I do the banking sector. Excuse me. So when I actually do the banks, I might repeat the same stock and the same symbol. So I apologize in advance if I do the same stock over. So I apologize again for that. And then also, if I'm moving around too much, I'm sorry about that too. I'm trying to familiarize myself with the new phone. So, anyways, um, this list is not in the order that I want or the price that I want. So the only order I have this in is through percentage, and these are the gainers in percentage. So as you can see, this is over a list of 500. As you can see, it's over 441 for decliners, 13 remain the same, and or some of these in the 13 for the unchanged, they might even been low volume and not even as active, or might even go bankrupt. Who knows? I'll review that in the list. I'll do as many as I can in the 15-minute video that I have, because I want to keep my viewership a little bit better and higher. So I'm going to do at least 10 stocks. So as you can see, the advances are 70. So let's begin. Again, this is not a recommendation. This is just for a review and for you to decide your risk tolerance. And if you're going to invest in the stock market, please consult a professional, somebody who's licensed, because I'm not licensed. But again, I'm reviewing this for educational purposes. So I hope you have fun and you learn a thing or two. So let's begin with the first one. This is a cheap stock. This one's pretty decent just right off the bat. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I'm going to try to do all 10. These are for, I don't know if, I'll let you know what it's good for. I don't know if it could be for swing trading or long term, but I will let you know. So let's begin. We have WEI, as you can see. Click on that one. So it's a share price of $1.23. So I'm gonna go over what it's good for. Earnings, not that good. So long term, right away, I'm just gonna give an overview just by looking at it. I've always explained these terminologies in my past videos, so you guys should know what this means, what this all means. So there shouldn't be a problem with understanding that. If you don't know what any of this means, watch my past videos. I explain them. So long term, I wouldn't even invest in this. This looks like a good short-term stock, maybe. I'm just saying in general. It's gone down, so yeah, I wouldn't invest in this. It looks like trash. Let's look at the chart. I'm gonna look at the 1-year chart. It looks pretty flat. Look at the 3-month chart. So I had a little gain there. 1-month chart. So it's picking up a little bit. So it's had only a 20 cents difference. So again, been some buying. It's just, yeah. Let me see. If I want to swing trade this or day trade this, what would I look at? Let's see. So we have the volume is over the average volume, but it should be at least 2 or 3 times more than the average. It's not, but it's still trading at the moment. 52-week low is 73 cents, 52-week high. So that's the range. That's not much of a range according to the price. Hasn't broke its high or near the high. I honestly don't even have to look at the numbers. So again, they do consumer lending, and this company is trash. I wouldn't even look at it. So there you have it. That's my review. WEI, it's not good. It's not a good company. Not even short-term or long-term. So CNF, next one. 3.25. Let's look at the 1 year. The 1 year has some volatility. Let's see the volume. Volume of 8,000. Yeah, that's nothing. Yeah, I wouldn't do this short term. No. Long term, maybe. Okay, it's been dropping down, so no. Where is, okay. I'm not gonna make a note. This is what I'm looking for. The line, okay. So, just by the numbers, looks like trash. Hasn't broken highs. Earnings per share 0.57. We could look at the financial details. Let's see what they got. I'm gonna look at the annual for 2020. It's been dropping. Yeah, that's trash. Year over year, dropping. Debt. And look how fast I'm going through this. I mean, you guys can see that it's dropping on. That's good actually, but all the other ones are trash. It's trash. Yeah, awful company. So awful. Next one, SFBC. Look at the numbers, volume. No. Earnings per share. Okay. Earnings per share. That's a good amount. Okay, pretty decent stock just because of what they're earning. PE's under 15, not bad. So, on the 1 month chart, there's some buying pressure there within the last 5 days. Let's see in the 1 day. I can't tell. Market cap 119 million. Wow, it's a small range cap company. So let's look at this. Let's look at the 2020. Not bad. Returns not bad. Operation debt. They have a lot of debt. That doesn't surprise me for a banking company. Let's look at the financials. Net income. I saw net income there. ROE. Earnings book. Wait, let me see the earnings again. Dropped a little. It's not too bad. Dropped a little. Net margins. Nothing. What's that one? Debt is pretty high. Cash flow. They lost a lot of their cash flow in 2020. Their net income has gone more. That's a good sign actually. Net income. But let's see if they have cash flow. 2020. See the 2020. 34 million. So they definitely have cash in the bank that could cover the dividend. Um, I just don't like their debt, but that's pretty typical for the banking sector. Um, let's look at the dividend history. So, wow, they do offer special dividends, which is pretty good. Let's see. Special dividend. It doesn't say how much they announced, but hopefully they so I would say yes, and this is a bank. I would say yes to this one. Next one up. So no, no, yes, good. FOA, not enough volume. No data. Oh, they're a blank check company. Did they just get... Maybe they just got bought out. Let me see something. Let's look at the charts. Now, if we look at the chart, let's see for the last year. Oh no, since May. So we're looking at since May. Let's look at the year, the 5-year. So basically a 1-year-old company, and then yeah, they haven't even broken $2. So no, they haven't grown. It's gonna take some time. Yeah, no. So the only good one so far is this one. So let's look at ITCB. Gonna go to annual. These are 2019 numbers. That doesn't even exist. Yeah, I don't think so. 364%. Yeah, I don't think so. Press release. So they give a dividend only once a year. Their ADR. I don't have much time, but I did, I think this is the 5th company. I'll do one more video to do the 10 companies. But, so far they've been going down. This company doesn't look good. That's a lot of selling. It's a lot of selling, too much selling. So, I have a new member on the board of directors. Analysis, yeah. Let me look at, yeah, support and resistance. Yeah, nothing. Let me look at the chart again. Let's look at the 1 year. Up and down. 5-year. Also, they've been hitting rock bottom here. This one I would keep my eye on. I mean, it's pretty tricky because I don't have 2020 numbers. I think once I get 2020 numbers, it's more of a factor you can decide. The dividend yield, it looks pretty high, so I'm sure dividend lovers will love that. But again, I would say hold. Put on your watch list and hold.